Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today is Sunday, so you know what that means. We're going around the net with all the news you can use in the week that was in credit and finance. And we've got an action-packed show for you today. We have Capital One getting sued by the CFPB. We have Amex paying some hefty fines from a few years back. And the Apple Card looks like it might be homeless or unhoused if you want to be that guy in the comments. Either way, what more do we need to say? Let's go ahead, press the subscribe button, and let's get to work. Now, yes, we had an action-packed week. We're going to lead off with Capital One and their lawsuit, impending lawsuit from the CFPB. So we'll put it right on screen for you. But the essential deals of this are Capital One has two savings accounts that were very similar, and one paid good interest and the other one didn't, and Capital One was being a little bit misleading about that. So that's where our good friends the CFPB comes into play. Today, the Consumer Financial Protection Bureau sued Capital One and its parent holding company, Capital One Financial Corp, for cheating millions of consumers out of more than $2 billion in interest. CFPB alleges that Capital One promised consumers that its flagship 360 savings account provided one of the nation's best and highest, in quotes, interest rates, but the bank froze the interest rate at a low level while rates rose nationwide. Around the same time, Capital One created a virtually identical product, 360 Performance Savings, that differed from 360 Savings only in that it paid out substantially more interest, at one point more than 14 times the 360 Savings rate. Capital One did not specifically notify 360 Savings account holders about the new product and instead worked to keep them in the dark about these better paying accounts. So there you go. They go on to say a little bit more, but the bullet points here, I do like how they do their press releases. Number one, again, misled consumers about the high interest rate accounts. That's the main claim. And then number two, kept consumers in the dark. Just like we said, over $2 billion in additional interest to millions of customers. So there you go. Yes, I mean, they do, I don't know if they're still up there, but they do have the 360 Performance Savings and the 360 Savings. You know, I think this is a good fight, a noble fight from the CFPB. A lot of times, you know, we sometimes disagree about what the CFPB should and shouldn't go after. Historically, when they went after, overdraft fees, I thought that was silly and just for PR's sake. This, while I don't think we should discount the fact that it is the consumer, all of us as consumers' responsibility to understand what products you're using and the other products out there at all times, which of course no one does, but it doesn't mean it's not your responsibility. When you get into the part of actively misleading, now they didn't really go into say like how did they go about actively misleading them, right? Like, did they remove the ads that you would see for 360 Performance Savings upgrades when you log into your account and things like that? I don't know. It doesn't go that far, or at least I haven't seen that yet. But to create two identical products and have one word difference, and after you especially froze the interest rate on one account, didn't unthought, so to speak, so the other one would get higher. I think that's worth a lawsuit. Also a warning to customers. Again, you got to pay attention. I don't think this is 100% on Capital One, because you got to pay attention. But on the other hand, I mean, they knew what they were doing. They named it so similar. They froze it and never unfroze it. I think there's enough there that's for shame, Capital One. I think these are good fights the CFPB goes after. But again, as customers, when I see this, I'm like, you just can't take it for granted. But I know a lot of people do, and it's banking, and they don't want to pay attention to banking. So I would say 80% Capital One's fault, 20% customer fault. So overall, we'll keep an eye on that. It seems like a layup case to me, but I am interested to see the details that come out. Of course, I think we did cover the 360 Performance Savings through promotional offers on Run on the Bank. So I think I had one at one point. I did close it, as we're supposed to do through churn it. That's the kind of the job of the second channel on the profitable-content.com. But more to come on that one. So they're just getting started having a bad day, but who's really having a bad day is American Express, because they're actually at the check writing stage of their fines or lawsuit. So this one, not CFPB, but Department of Justice, going after Amex, or went after Amex for some stuff that happened a while back, a few years ago. So specifically, we will take a look at this. This was from a CNBC post we found on our credit cards, and they were nice enough to pull out the stuff you would want to know. So American Express will pay a total of $230 million to resolve federal wire fraud investigations and to settle civil allegations of deceptive marketing. That's what Amex said on Thursday. So separately, the banking giant will pay $108.7 million to resolve civil claims by the DOJ that it deceptively marketed credit cards to small businesses, among other allegations. The separate civil settlement announced Thursday centered on allegations that Amex deceptively marketed credit cards through an affiliated entity that initiated sales calls to small businesses. I would like more details about that. The practice, which took place from 2014 to 2017, included misrepresenting the card rewards or fees and whether credit checks would be done without a customer's consent. Practices also allegedly included submitting falsified financial information, that'll do it, for prospective customers, such as overstating a business's income. Amex also allegedly tried to deceive its federally insured financial institution to let small business customers acquire credit cards without legally required employer identification numbers, EINs. United States alleged that American Express employees used dummy EINs such as the 1, 2, 3, 4, 5, 6, 7 in opening small business credit cards in 2015 and the first half of 16. Amex's settlement agreement with DOJ's Civil Division does not include an admission of liability or wrongdoing. I always love that. What are you paying for that? Realistically saying yes, we're wrong, I think opens you up to more lawsuits and issues. That's why they never want to say it, but yeah, they must have done it. Which is interesting. The EIN part is interesting because nowadays you don't have to have an EIN number. And I was reading through some Reddit discussion on this. I couldn't really find an answer or someone. We need a veteran of the game who was applying for business cards back then to let us know if it was devil may care as it is now. You can just open up sole prop your social security number as a tax ID and it's fine. Back in the day, they may have enforced having an EIN because why would you want a business card if you weren't at least an LLC or something? That kind of comes to mind. Anytime you get into involvement with these affiliate marketing companies, I mean, that's kind of why all the rules come in on us who push credit card links, right? And that's why it's a lot about they care a lot more about what you write, it seems, just as a little bit behind the scenes. That's why if we ever cover a credit card offer on the second channel, there's never like an accompanying blog post because what you write seems to be much more important than what like these videos we were giving opinions and things like that. I'm sure they would feel differently if asked directly, but as far as enforcement, that's kind of what I've seen. So yeah, it looks like they did it for sure. The EIN thing is just interesting to me. It's possible it was totally different back then and you needed it. And, them putting in that number, that 1, 2, 3, 4, 5, is just them trying to input something to get around it, not the newest trick in the book. But then the back office just kind of let it go. You'd think that would flag something eventually because you'd have, multiples of those. But hey, there you go. So not to worry, though, because American Express still has plenty of money to throw around. You know how I know that? Because you're getting a new Centurion Lounge. So if you haven't been off-put by that, you'd like to see this new Centurion Lounge coming to Boston Logan International Airport. Now we're a ways away, but this is from View from the Wing, or they got it from Thrifty Traveler. It's always hard to figure out who had what first, but I found it from View from the Wing. And you got some pictures of the airport where we think the area is going to be because this is going to involve them actually building out a space for them. So Boston Logan Airport will get an American Express Centurion Lounge and it's expected to open in 2027. The agreement was approved by the airport's board on Thursday and will require building out, like we said, a new structure to accommodate a two-story lounge totaling 20,000 square feet near gate C10. There will be a rooftop bar and patio, which would be nice for the few months that you can use it, and overall that's kind of where you've got it at, like the pictures proposed how it looks today versus how it will look back then. So it is interesting. Logan's not that big of an airport, but at least from what I remember, I've only been there once, and I just remembered sitting on the tarmac forever because I think it was a smaller airport. So we're now out of airport space and we're just building onto airports, adding lounges, but hey, why not? Sounds cool enough. I mean, Centurion Lounge is, again, an open rooftop bar. We'll just have to see what happens crowding-wise. 20,000 square feet, you'd think it would work, but there's a lot of people with platinum cards, which we think will probably change when they refresh it. But overall, building one from scratch is interesting. I mean, this has potential to be one of their nicer flagship ones. Again, it's coming from scratch. So we'll have to see about that. So apparently the $230 million did not slow them up at all. It means we're definitely paying too much for those credit cards. Now, you knew I was going to rant about this for a while. Apple and Goldman Sachs have been on the breakup path forever. At this point, they're just like two people sitting in the ice cream shop trying to break up, letting their ice cream is all melted by now and just a mess, sprinkles everywhere and such, because they just can't separate. So as you know, but in case you're new here, Goldman Sachs has wanted out of the Apple Card deal for quite some time now. Apple's is like, sure, fine, but like we gotta find a new player too before we just move out all of our stuff. Fine. That's proving difficult. So there was this interesting quote, like this throwaway-ish quote earlier in the week, from Reuters, who actually got all this. I get this from Mac Rumors, who got it from Reuters, but they were talking to an interview through Goldman's top boss about the partnership, where he basically said, we have a contract with Apple to run through 2030, although there's some possibility that it won't continue until that time frame. Yeah, I think we all knew that, though. Like, I don't know. It sounds like someone was asking him again. He's like, yes, it's 2030. It could end early. It seems like a boilerplate answer. I don't know there's much in there, because I think they've all both acknowledged they want out. Now, the other interesting part from Mac Rumors is that new reporting comes in that Apple is in talk with Barclays, still Synchrony, who we thought was out, and Chase, who's been in the mix sort of since late last year, but kind of tire kicking. We haven't heard too much from them. So basically they're talking to 3 more banks. That's of course after Capital One, I believe, passed, and in a few other. We thought Synchrony had passed, but apparently they're still in the mix. So Barclays is interesting, because Barclays does do they do exclusively over here co-branded cards, so they'd probably be capable of doing it. Barclays issued the original Apple Card, just it wasn't really nearly as hyped up as the current one we have, so not exactly strangers. Synchrony, of course, does the same thing. At this point, it just really doesn't seem like anyone wants the thing. It may be not as much to do with Apple's pickiness and their high-end demands of like, hey, you've got to pay out Apple Cash daily, or you've got to make all the bills due on the same day, or what have you. It might be more to do with the actual portfolio of customer accounts that they have. We're always on this game of won't there be a recession? Things cost so much, people are getting sacked left and right, on and on and on, right? So it might just be a risky time for places to take on that large of a portfolio. Out of that entire group, I still haven't really changed my opinion. It probably should be Chase. I think Chase would do it. Chase is an interesting spot when they're like, on one hand, everyone's yelling about growing and acquiring more customers, even though it seems being the top bank in the States, you have most of them. Well, that could help. And I do think they'll roll dice and take risks on, riskier portfolios. They could always come in like, wait, well, we're going to have to go in and readjust credit limits, what have you, raise interest rates. We're going to have to do something. We know historically there's no fees with the Apple Card, even missed payments. So there's still some adjustments that can be made. It's just interesting that there's no real takers. No one has stepped in front as a real winner. So it either has to do with Apple and their annoyances, which again I still think they would yield on a lot of things, because as we've said before, this version of Apple is more about the money than anything else. They don't really do that much innovation anymore. It's more so just recycling parts, snapping together the same phone and shipping it out, which is a shame because it's not as fun anymore. And they care more about the money ever since that first hit of the $1 trillion valuation. So I'm not sure I think the portfolio is probably the holdup given its size. But again, I try to keep applying for the Apple Card when I get the targeted offers, and they won't approve me at all. So apparently they've tightened it up to some degree on the portfolio. So Apple Card still remains homeless or unhoused, if you prefer. I still think it's Chase. They did reference the MasterCard partnership goes through at least 2026. I don't really think that's a problem. They cited that as the reason American Express didn't want to do it. I don't know. I mean, they could have gotten around that. They could have just said, sure, we'll just wait until 2026, and then take it then when we can put it on our own network. Again, you don't want American Express to do that. That portfolio definitely wouldn't sit well with them. They capped their 3% cashback cards. It wouldn't be a good fit. I still contend it's Chase. I thought Capital One had a shot. Barclays and Synchrony would just be settling. They could both do it, but I still think you'd see dramatically reduced credit limits across the board, interest hikes, and you'd probably get a slip on back end stuff, I'd imagine. But Hey, let me know if you're an Apple Card holder. Are they approving you still? If you've just got one, or where do you hope it goes? I think it's Chase. We'll call it there. Let me know what you think down below, because that has been the news for this week. So, of course, if you liked it, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel, as we're posting content just like this every single week. And, of course, right back here every Sunday with all the news you can use in the week that was in credit and finance. And, of course, every single day over on ProfitfulContent.com, which is the channel's blog. It's always linked down below for you and on the channel homepage. We've got the latest news stories, bank promotions, and credit card offers. Nothing from Apple yet, but you never know. If it becomes a Chase card, we could see. Anyways, guys, that'll do it for this one. As always, thank you so much for watching. I'll talk to you very soon next week.